Hello guys, welcome to another DVL video. Today, taking an in-depth look at ORCL Corporation, a multinational tech company headquartered in Austin and led by Larry Ellison, the famous CEO. First, let's start with valuation, of course. The free cash flow yield is 3.67%. The price to earnings is 42. Their business metrics look pretty good, except for the current ratio. So the current ratio is 0.71. This is not really great. This is not horrible either, but their ROIC is 11.28% and their return on equity is 120%. So these are pretty good. Now going to Graham's valuation, using the 2025 estimated earnings per share with a 13.5% projected growth rate and the triple A corporate bond yield, we get an intrinsic value of $97. Going to discounted cash flow, again 13.5% growth rate, 2% perpetual, and an 8% discount rate, we get an intrinsic value of $124.93. Historical multiples, we can see that their trailing 12 months price to earnings is way above the historical average. So about double actually of the historical average. So this is pretty problematic. Going to multiples valuation, I've compared them to Amazon, Microsoft, Google, and IBM. Of course, Microsoft for Azure, Amazon for web services, and so on with Alphabet and IBM because they're their competitors in cloud. Now going to the dividend discount model, applying a 7.5% growth rate with an 8% discount, we get an intrinsic value of $365. And the output is the average of all of these four. We get an intrinsic value that is $180, almost the same as the current price. And of course, applying a 15% margin of safety, we get an acceptable buy price of $153. Now, for the commentary. I believe that Oracle is a hold. Now, this is just my opinion. This is not meant to be taken as financial advice. Please do your own due diligence. And in my opinion, they're a hold because they're not really trading at a good enough valuation to be a buy, and they do not have the business metrics to warrant a buy at such a high valuation. So for now, they're a hold, in my opinion. But if their stock was to drop to, I don't know, $150, $140, then yeah, they would be an immediate buy. I personally would buy them. For all the holders out there, I think I should continue holding. I don't see why this company could be a sell. Of course, maybe you find something that I did not. You do your own due diligence, and you find something very interesting about the company, then please share your findings with me and everyone else in the investing community. But this seems to be a good company. Of course, we've seen the business metrics. They have a good payout ratio, so they do not have a problem increasing the dividend further. They have a good discounted cash flow stability and growth since at least 2022. And yeah, this is a great company. I like it, but just not the right price. Before ending the video, I'd like to talk a bit about our fee for today, Ticker Data. Ticker Data is a tool that I've used. So you see this template here with the real-time financial data. For example, if I put in MSFT, you'll see all of it loading up. This is a great tool and yeah, very interesting. It also comes with a community where you can talk with other investors, and this is just for $10 a month. And I think people in Europe and the United States can afford it. So if you can afford $10 a month, which I think is not that much for many investors, you have access to a great community, great templates, and a very good API for Excel. Also, do not forget to check out my investing blog from the link in the description below. And I hope to see you in the next video, guys. Bye.